Hi there, I'm Dermot McDermott, bringing you Friday's Targets in Focus. Today I'm joined by Kiran Kowshik, FX strategist at BNP Paribas in London. So Kiran, the euro was steady against the US dollar in light trade today. We saw it hovering near almost 6-week highs as markets were waiting for the release of US consumer sentiment. So in terms of the euro dollar, what type of impact are these tapering talks having? And of course, how do you see this pair performing before and after the ECB rate decision and the FOMC meeting?
Yeah, in terms of what's driving the markets, we think really it's continued yield declines working to the detriment of the dollar ahead of next week's FOMC meeting. At the same time, what you're seeing from the rest of the world is that data is showing some signs of stabilization higher. And central banks are veering away from the dovish side. So, for instance, if you look at the ECB or the Bank of England, we think next week they could sound less dovish. And at the same time, in the rest of the world, in particular, a lot of countries in the emerging markets, a lot of the PMIs next week are expected to tick higher. So I think generally this should work against the dollar, and you should see a continuation of this tactical sell-off in the dollar going forward. In terms of today's consumer sentiment index, which you mentioned, don't think it will be too much of a driver. I think what will really drive the dollar today is that the markets in the U.S. will really reflect on these news reports overnight, which we've had from Wall Street Journal Fed watcher Hilsenrath, suggesting that the Fed could consider forward guidance next week. And at the same time, I think in the race to Bernanke's successor, some of these reports suggest that Larry Summers, who's considered more hawkish, is having a diminishing chance of being the next Fed chairman. So I think all these factors probably work against the dollar today as well. So we have euro dollar at 128 by the end of September and 126 by the end of the year. But what we stress with euro dollar is probably it may be the worst way to play a bullish dollar view. And the reason is that at the end of the day, despite how weak growth is in the eurozone, they still have a stellar current account surplus. And I think that trade-related demand, which you are seeing, is persistent and will continue to be bullish for euro crosses in general. But as I mentioned, for Q3 and further out, we have a bullish dollar view on the view that the Fed tapers. So that should see modest downside in euro dollar to 126 by the end of this year.
And looking at the cable, the sterling moved higher against the dollar today after UK growth rates met expectations, while US jobless claims figures came in actually worse than expected. Can you tell me more about the trading trends we are currently witnessing?
I think in the bigger scheme of things, the GDP report showed that the economy continues to remain far behind achieving escape velocity. And what that means is eventually the Bank of England will probably move to forward guidance, which we expect at the August 6th inflation report, and probably do asset purchases in November. So that should prove sterling bearish on a multi-month view. But in terms of the next 1 to 3 weeks, what I would say is the GDP result of 0.6 was pretty much bang in line with what the Bank of England has been assuming. And what I think will happen next week is I think the Bank of England meeting on August 1st could turn out to be a bit of a non-event, which should see sterling squeeze higher. I think there's still a couple of sterling short positions out there, which is vulnerable to a squeeze higher. In terms of tactical trading, what I would say is I wouldn't be surprised if I see cable up towards 150, 450 next week. But longer term, we remain bearish. So if you look at the end of 2013, we have a forecast of 143. And that's very much driven by expectations of a major change in policy guidance from the Bank of England under Carney.
And finally, looking at the Japanese yen. How did the pickup of inflation affect the dollar yen, and what will be the driving factors for this pair?
So in the very near term, dollar yen remains exclusively a play on the dollar. And for that, we need to look at U.S. yields, which continue to decline. So I think that's really what is hurting dollar yen right now. What I also would say is I think there were some legacy long dollar yen positions after the LDP's win at the upper house election last week. And I think that's been hit with this broader move lower in the dollar. In terms of the inflation trends, I think they are very positive in terms of what the Bank of Japan is trying to accomplish and should play bearish yen in the longer term. So we have bullish forecast for dollar yen. We forecast 106 by the end of Q3 and 108 at the end of the year. In terms of next week, what I would really focus on is comments from Bank of Japan Governor Shirakawa. Now, he speaks on Monday, so I'll be looking for any comments he has surrounding the consumption tax hike. It's very uncertain as to whether the Japanese government will go ahead with the consumption tax hike in September, but I think it's very much a prerequisite for further yen weakness.
Thank you very much, Kiran, for that. Well, make sure you also have a look at the weekly wrap-up with my colleague, Monica Gibson. Goodbye for now.